Good afternoon, everyone. This is Henry Gambell with SimplerTrading.com, and in tonight's free video, I wanted to go over one of my favorite strategies that I think you can apply in the current market, and I'm going to look at it here in SPY. So today, a pretty decent rebound. You can see you've got the ETF that tried closing pretty much right at the 21 EMA after yesterday's significant volatility. Now, one of the tricks to putting this trade on will depend on how we open. So if we open lower, I don't necessarily like this trade as much. While it may still work, it's going to be a little bit more difficult to get a good fill on. But what I would like to look at is that if you do see any strength on Friday and we're trading up into this area, look at the idea that the S&Ps are not going to make a new high before next Friday. So you can see that we've got that old high, the one made just right here at about 385 or so. So what I would do is come back over to an options chain, and I'm looking at the SPY that is currently 8 days out there. Again, that's going to be the 5th of February, next Friday's expiration. And I'm going to try to position this butterfly right there at that old high. Now what's unique about this trade is that it will make money in every situation except if we explode higher. If we come back up and we revisit this high, but we do not close above it on Friday, well then we'll make good money. If it rolls over, if it trades sideways, all of those will make you money. And the way that I would look at constructing that trade is to take this 385 and use this as the body of your butterfly. We want to buy. Look at a deep and wide 1 month 3 strike unbalanced butterfly. If you're new to these, I would encourage you to spend the time to study them because I do think they can be an excellent addition to any trading that you may be currently doing. But let's just say that you do get a little bit of that strength tomorrow morning. If you're up there in that area and this trade goes for something like a 50-cent credit, that sets you up with a maximum risk of $250. The chance of making up to $350 if it were to close exactly at 385. And I think the most important aspect of this, especially after what we saw on this day, is that this type of a strategy will give you no downside risk. So, you edge up, you're okay. You trade sideways, you're okay. You have another big down day. All of those situations make you money, and I think that's a very attractive strategy for the current market environment. So, I hope that is helpful, and we'll see you at the next free video.